I want to convert my old 401k to Roth IRA, but don't know how. What tax payments? Okay. Um, I'm assuming you're asking what you would have to do with the old 401k. I do have a video on that, okay, I'll just do some demonstration. But yes, a lot of people have some sort of old 401k from the your previous employer. You might have a old TSP from the time when you did when you served in the military, or when you were a Fed. Okay, so let's say you have a 401 old 401k that you are put old. Okay, you're no longer employed with that company, just sitting there growing. So you need to first find out if this is a traditional or Roth. Okay, traditional or Roth, that matters, because you need to find out. You can't just put Roth 401k into like traditional 401k. So you have several options. You can move this to your current employers, either 401k, 403b, 457, or TSP. Okay, if you want to do the simple rollover, traditional to traditional, you're not going to get taxed on it. Okay, you're going to get taxed as soon as you do traditional to Roth. So let's say $10,000. You have 10K that you want to convert. So remember the term, it's now called conversion. Okay, so when you convert this, let's say you can convert it from traditional 401k to your current traditional Roth 401k if you want to, or if like you said in the question, if you just do Roth Roth IRA, then you would have to pay taxes in 2025 when you file taxes for 2024. So for $10,000, you have to remember this. This entire $10,000 is going to be considered taxable income. So if your current income, let's say, is I don't know, let's say 90K, all right, you have to add that here to 10K, and now your taxable income is going to be 100K. All right, you still need to remember that you're going to have standard deduction. I don't know if you're single or married. So for standard deduction, and then it's going to subtract that from $100,000, and then the rest of it will be taxable income. Okay, so let's say that you have $100,000 in taxable income. Then you're going to get taxed at 10%, okay, 12%, then 22%. If you're a single individual, you're definitely going to be in 22%. If you're married, filing your taxes jointly, then you're going to be barely at 22%, assuming that the only deduction you have is your standard deduction. So that's what you have to remember, that this $10,000 that you add on and your income, assuming that, let's say you make $90,000 a year, and in this scenario is 22% marginal tax rate. So 10K multiplied by 22%, your tax bill is going to be $2,200. Remember this, okay? They're not, if you don't tell them to withhold that the taxes from them, you're gonna have to pay $2,200 to the IRS when you file your taxes. You also have to remember, if you under withhold your federal income tax, let's say you don't withhold your $2,200 at all this year, and you say, you know what, I'm just gonna pay for it later. You don't meet that 90% withholding threshold, you're gonna be penalized by the IRS. So you should really consider withholding some of those taxes when you convert it from your old 401k to a Roth IRA. Who holds that tax withholding? That would be the old 401k. All right. So let's say you have an old 401k with Vanguard, and you're gonna move it to a Vanguard Roth IRA. If it's with the same broker, then it's gonna be pretty easy, where you can just have the Vanguard withhold 22% of $10,000. Okay, that would be for the Roth IRA conversion. If you're going to another broker, let's say you have Schwab IRA, but you have a Vanguard 401k, then Vanguard 401k would hold on to that 22% or $2,200 in tax withholding. Remember, if you get penalized by the IRS because you didn't meet that 90% threshold, you're going to be penalized under the Fed funds rate. The Fed funds rates are really high right now. Right now, it's 5.25 to 5.5% at the time I'm recording this video. If you were penalized in 2021, you would have been fine. But if you were not fine, but you would have been like paying 2%, right? When the Fed funds rates were like super low. But right now, if you get penalized by the IRS, it's really hefty. So please keep that in mind. Be very careful. I hope I didn't lose you on this. I hope this kind of helped some of you guys out. It would be the same concept if you have a TSP, 401k, 403b, 457. So really great question.